Here's how much I think the investment firm who sold the masters back to Taylor Swift probably made. Now first, I want you to know that music properties are actually pretty compelling investments because people always listen to music regardless of the economy, and there's a really wide breadth of artists and songs and geographies. There's a lot of money in radio, in-person playing, as well as sync licensing, which is used in commercials. So in the case of TS, Scooter Braun, one of her rivals, actually bought the masters to her first 6 albums, and he sold those masters to Shamrock Capital back in 2020. And here's where the private equity math comes in, Shamrock being one of the largest sports and media investment firms. So we can see that Shamrock paid $300 million for the catalog back in November 2020. But what a lot of articles neglected to mention is that they almost definitely used some amount of leverage in order to do this deal. A lot of these music portfolios can actually support maybe 50 to 65% loan to value. I'm going to be conservative and say 50%, which means that they raised $150 million of debt and they put $150 million of their own money as equity. Now, the next thing we have to do is create some kind of simple forecast for the business. Now, for profit, I'm gonna be using this estimate from Billboard, which uses Luminate streaming data. They estimate $60 million of annual revenue, as well as a 50% profit margin to pay out distribution and royalties to Swift herself. So that means we have $30 million of annual profit, which implies a 5 times debt multiple, also reasonable. And I assumed a 6% interest rate on the debt. Very important, we have to deduct the interest amount every single year. We then build the forecast out until May 2025, sum up all the cash flows to get $95 million. And what we're gonna assume is that we use that $95 million to pay down all the debt at the end of the forecast. So 150 minus 95, that means there's $55 million of ending debt. Now for the last step, we're gonna take the $360 million, which was estimated as Shamrock's sale price, and we're gonna deduct $55 million of remaining debt. So that means that Shamrock is actually going to get $305 million into their pocket. So we can kind of use the rule of 72 here. They doubled in under 5 years, so it would be a little over 15% annual return. And using Excel, the actual IRR that I would estimate for this deal is 17%. And if you look at overall private equity, this would be high second quartile, so it'd be good, but maybe not great. However, if this is truly a non-correlated return, this could be excellent in the right portfolio. And I also want to point out that TS has given so much brand value to Shamrock Capital. It's probably the most praised for private equity firm I've ever seen.